You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees. And it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/optionsbootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. Welcome back to the network on this fine Education Wednesday. It's always been one of my favorite days of the week, but it just got ratcheted up a little bit, listeners, because it is no longer just Education Wednesday on the network here. Nope. It is also soon to be Futures Wednesday coming up after the show when we launch something new, but we'll get to all that fun in a little bit. My name, of course, Mark Longo from the optionsinsider.com, as well as from the network. This network's been going for over 17 and a half years, listeners. And you know what? Still not just going strong, but growing all the time. Thanks in no small part to you folks and the listeners of Boot Camp and everybody else out there for listening, for telling friends, for liking, for subscribing, for checking out the sponsors we have on the network. That goes a long way towards supporting the content as well. Hope you were not satisfied with the nearly a dozen programs we had coming at you now, because one more getting added to the mix immediately after this show today, 2 p.m. Central. I will be back for the first ever, the inaugural episode of the Futures Rundown. People have been asking us for years, man, when are you going to have something futures-oriented? We have This Week in Futures Options. We love that. It obviously touches on the underlying markets every Thursday. But this is a little bit different take. Going to talk about the futures themselves, what's going on out there. I'll break down some of these wild products you may have heard out and said, what the hell is that? We're going to get into that. So there's definitely an educational component out there as well. So for listeners of Options Bootcamp, you should be definitely checking out the Futures Rundown out there. And then, of course, going to talk about some volume, some activity out there, dive deep into the specs of some of the weird products. What the hell is RBOB? We'll get to all that fun. And a whole bunch more great guests joining me. So that'll be coming up every Wednesday after this program. Of course, I tell you all the time, if you're listening to Boot Camp, you need to be listening to the full network because that's where you get all the other cool stuff. And if you're subscribed to the full network already, congratulations. You'll have the Futures Rundown in your inbox shortly after this show. So just stay tuned for that on the on-demand side. And as a celebratory thing, we're opening up the live today to everybody. So everybody gets to play out there. So you can listen to Boot Camp today. That's why you should be following us at Options on Twitter. We put out the link right before showtime. Opened it up to all comers. A celebratory day out there as we launch a new show here on the network. And of course, the network grows based on the lift you folks give it, like Chad out there this week giving us 5 stars, saying he's learning a lot and lots of episodes. You're not lying. There are lots of episodes, Chad. So glad to see you're enjoying it. Take it easy. It's a lot of episodes. I agree. So you might want to bite it off a little bit at a time. Don't overwhelm yourself with all the goodness that's just lurking in the Boot Camp feed, let alone the rest of the network. And speaking of goodness, could we have any goodness on the show if we didn't have the dark side to balance out my light side, aka the black-hatted one himself, the yin to my yang, none other than Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call to Mr. P, welcome back to Options Boot Camp, sir.
Oh, it is always good to be back on Boot Camp, Mark.
Are you as giddy as I am that we have yet another new show coming on to the network soon? It's a pretty exciting day here in the old Options Insider HQ, if I do say so myself, sir.
Yeah, I think that's pretty cool, man. I think that's going to be great.
And you know what? To celebrate, Dan, let's give something away. How about that? It's that time. Right. It's that time of the month, listeners. It is the first pretty much broadcast day we have here for the new month of September. That means it's time to give one of our pro members an awesome pro trading crate. So, Dan, I have fired up the random number generator. The power is in your hands now. You get to choose. So, listeners, if you do win, you can thank me. If you don't win, get angry at Dan. See how that works? All right, Mr. Dan, you tell me whenever you want to stop, and I shall tell you who you have selected for this month's Pro Trading Crate. Are you ready, sir?
I am ready.
All right, it's going. Have at it.
And ready. Wait, hold on. Here it comes. Stop.
Oh, there we go. See? Cat-like reflexes yet again, sir. All right. Let's see. Who did you pick? By the way, of course, listeners, you can get your name in the hat for the September Pro Trading Crate right now. Just get on over to theoptionsinsider.com/pro. Click on the Join tab, and bam, you're in there. And who did you pick, Dan? Oh, one of our newer members, Gigi, Madam Gigi. Look at you. She's hot out of the gate. She just joined like a month or two ago. We're hot out of the gate, Dan. She's winning a Pro Trading Crate. Man, you just made, dare I say it, her trading year, sir. So, wow, congratulations to you, Madam Gigi. Hot out of the gate, joining up, winning a Pro Trading Crate. Awesome. Couldn't be happier for you. The rest of you, keep your names in the hat. We will be drawn again post-haste as we keep on rolling into a little bit of your mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, let's do it. Let's go crazy with some questions. And when I talk about crazy questions, there can really be only one destination for us, listeners. It doesn't get any crazier than the Market Taker question of the week.
And now, it's the moment you've been waiting for. It's time for the Market Taker question of the week.
Gotta admit it, Dan, your tune there is kind of growing on me. I kind of find myself humming along to it as it's going. Good thing it's not a video show because I'm kind of bopping along to it. But I do have to say, I don't just like your question theme. I like your question this week, Mr. Dan, because this is one I just grappled with this myself not too long ago. Remember the big meltdown of August 5th? Guess who was traveling? This guy. So a frequent thing that every trader will bump into. Dan, what you got for us this week?
Yep, I find myself out of town here. And how do you deal with trades when you're traveling? You try and not have them on when you're traveling. That is my best advice. Now, this was kind of a sudden trip. I, just picked up and ran out the door and jumped on a plane. And so I did close out everything that I had. It was one of those fortunate times where it worked out to get out of everything today, all my straddles that I had on. But yeah, try and have as little on as possible. I did have a little bit of downtime today, went through my IRA and tidied it all up, but know how much time you have to spend in order to be effective and plan around it, man. That's my best advice.
Where are you right now? Where are you beaming in from, sir?
I am beaming in from sunny and smoky Las Vegas.
Oh, you sound pretty good, actually. You sound like you're in the Frankfurt studio there. So I wouldn't have known until you told us there that you're at the craps table right now as we speak. What's that I hear? Horn high, yo. Oh, go for it, Dan. I think you hit a good one. I recommend the pass line, but hey, to each their own. If you want to go, don't pass. If you want to be that guy as well, have the rest of the table rooting against you, then by all means, you could be that guy. Remind me to tell you my story one time of me playing into the wee hours of the morning in Atlantic City, of all places, with me playing pass and one other guy playing don't pass. It was a pretty toxic night, let me just say it that way. But that's a conversation for another day out there, listeners. Good advice. Yeah, I came up against that just very recently. I took everything off going into the big weekend that turned out to be the August 5th sell-off, including your beloved UVIX trade, Dan. I probably would have had it on that weekend for size, which, as we all know, was the best weekend in the history of that product. So yeah, sometimes this one can come back to bite you. But at the end of the day, listeners, it can obviously work the other way as well. When you're traveling, it is wisest to scale it back for a variety of reasons. As Dan just said, first off, you don't really have time. You're traveling, you're with your family, friends, whatever you do. You don't want to be sitting at on your phone or your device managing positions. You want to be doing what you're paying all that money to go do. Or maybe it's a business trip. Again, you don't have time. B, you might be on a lot of public Wi-Fi and other things. You don't want to be logging into sensitive accounts like your brokerage account on public systems. I mean, maybe you have a VPN to protect it, but that's still a dicey prospect. So for a lot of reasons. And then on top of it, you're not going to have time to manage things. Something goes crazy. What are you going to do? So yeah, at the end of the day, that's what most of the pros do. It's not the sexiest thing in the world, but at the end of the day, if you're not going to be around, take it off, live to fight another day. Or in my case, miss one of the best, weekends of that trade ever. But hey, it happens. It happens to all of us at the end of the day, listeners. Let's see what else you folks had on the brain. We asked you last week, going into the big announcement, there's two big data points everyone was waiting for. One was the Fed with Jackson Hole, and then the other one was NVIDIA earnings. We asked you last week, the NVIDIA was pricing in about $12.75 heading into their announcement. That was well beyond their long-term average, as long as we've been tracking it, around $10.50. That's for the last 3 years, 12 quarters, listeners. So pricing in $2.25 on top of that already seemed pretty juicy, but we thought we'd ask you folks, is that too juicy, too cheap, or just right? And it came in pretty close to a tie, but sounds about right. Took it with about 46.7%. Too pricey was surging. They had a last-minute surge, but not enough to take it. 41.7% saying too pricey, and too cheap, not expensive enough. Only 11.7% out there. And it was a weird one in the after hours. The stock whipsawed quite a bit. And then they did come for it later on in the session and the session after that. So kind of one of those weird ones where they didn't knock the cover off the ball. So the stock at the end of the day didn't really light the world on fire. So you could have done all right on the straddle, but you had to have really you had to really kind of get the bottom there on the overnight session. And not a lot of people could do that, obviously. So it was, at the end of the day, too pricey was the answer out there. All right. And we also asked you, and speaking of futures, timely with our future show coming up just in about 40 minutes. We asked you last week on our TWIFO show that 20 days to go, we saw some size paper going up in WTI, a.k.a. crude oil. Crude oil is hanging right around $75 at the time. We said it was the OCC 80 and the OCC 70 puts, both trading for size, both pretty much equidistant out of the money options. So we said, you know what, gun to your head, if you had to pick one to buy, which one would you buy? And it was a neck and neck race, Dan, but it ended up ever so slightly, 52.6% saying they wanted the OCC 80 call, so the upside, and the OCC 70 puts coming in at 47.7%, just in time for crude oil to set a 9-month low this morning, Mr. Dan. So maybe the puts were the right answer after all. What do you think?
Wow. Yeah. Interesting. I probably, well, I don't know what I would have picked at the time, but yeah, interesting though.
I'll give you credit. I would have said you'd have bought the puts. Why not? Why not, Dan? I'm in that kind of generous mood out there today. Can you also tell I've been sucking on an energy drink here for a little? So I'm fired up. I'm ready to go for not just for this show, but for the upcoming future show. Have you heard about the future show coming up in a little bit, listeners? All right, let's keep rolling to what the folks have in store for us this week. Let's go out to this one. Got some good handles on the show this week, Dan. Next up, we have Everyday Andy. So he's not a wild and crazy Andy. He's just kind of the everyday. He's the kind of Andy you bring home to mama. You know, he's not the wild goth punk Andy. You know, not going to burn your house down Andy. Just kind of an everyday Andy. I can get behind that, Andy. So let's see if he has an everyday question, Dan. He says, I'm having fun with the handles today. All right. He says, am I correct in assuming that the net delta of a long vertical spread is just the difference of the two deltas? So if I buy a call with a 50 delta and then sell a call with a 30 delta, the spread is net long 20 deltas? Short answer, yes, but longer answer, we'll get into it. Does that also work for the gamma and the theta? Do I just subtract them to get the net amounts for the spread? Thank you for taking the time to answer my question. Well, everyday Andy delivering with an everyday, but you know what? An important question, Dan, about spread deltas. We're always telling folks to trade spreads here on the show whenever possible. Let's get into the Greeks. And you know what? As the man who, dare I say it, wrote the book on the Greeks, you are perfectly situated to answer this question, sir. What do you got for everyday Andy?
Yeah, everyday Andy. So, you know what I like about this question is that it shows you were thinking about it and arrived at the right answer. I think this is one of those things that a lot of people have to have pointed out to them. And so clearly your mind is working in the right direction. You're getting curious, which is a wonderful thing. So yeah, that is how it works with all spreads and all the Greeks for all spreads. And so we always need to, think about, if we're talking about theta, if I'm buying this option, that's negative theta. If I'm selling this option, that's positive theta. So we're going to combine the two. And, you can do your own little math heuristics. Are you subtracting one from the other, or are you, adding the negative to the positive? However your brain works, you do it that way. But yeah, you're always netting out the Greeks, I just bring up the more mathematical version of it because when we're dealing with things like butterflies or iron condors, stuff where there's 3 or 4 legs, you really have to either think through the heuristics or just, keep the negative signs where the negative signs belong and just do it sort of the long algebraic way because you don't want to mess it up while you're combining it. So, yep, good arrival at insight, everyday Andy.
Is there a chapter on spread deltas in your seminal tome, Trading Options Greek, sir?
Yeah, yes, there's several chapters. I basically break down the Greeks based on different types of positions. So, yep, that is something we talk a lot about in that book.
There you go, listeners, and everyday Andy. If you want more about spread deltas, even though he came to it intuitively on his own, if you want more everyday Andy, of course, check out our archives or check out Dan's book, Trading Options Greeks. He did write the book on it, after all. Let's keep on rolling out here. Man, we got handles all over the place today. This one, NLSZ $. So a bunch of alphabet soup and a $. Nils's $. Wants to know, what's a good way to determine the skew levels in the S&P 500? How do I know what's happening and when it's a good time to buy protection? Well, good question, Nils's $. I could throw a number at you. I could say the CBOE skew index is 163.60 right now. That tells you everything you need to know, right? No, of course not. We've made fun of the skew index many times in the past. It is a deeply flawed product. A lot of people had a lot of hope for this when it launched. They're trying to make skew palatable and understandable and relatable to the masses. And it has failed on every one of those measures right now. If you just look at it right now on a 52-week chart, the low is 127, the high is 170.5. So it's trending towards the upper boundary there. But again, that tells you nothing. It's a close to close index to start with, so it doesn't tell you intraday what's happening. So that already throw it out the window from a utility perspective. But then on top of it is two moving parts, the call wing and the put wing. You have no idea where that premium is coming from. Is it the puts? Is it calls? What's going on out there? So throw away the skew index. You may have heard about it, but for most people, for everybody really, it's a useless index. I would love to see the SIBO update it, make it intraday, get rid of this obtuse nomenclature of north of 125. It's completely counterintuitive for most people. So forget about that. Obviously, your broker is going to have a lot of good tools out there, and I don't know what broker you're using. So there's a lot of different ones. Thinkorswim has good skew tools. All the big platforms are going to have decent skew tools. But, if you want something free and readily accessible that I think is probably the best in the game, dare I say it, it's the reports that we put out for our This Week in Futures options show, TWIFO. You can get those for free all day long, every day. Just type CME Group. So we put it out with our friends over there at CME. And indeed, Nick and his team just was on our Pro Q&A yesterday. Nick Howard from Bantix, they actually crunched the numbers for us for Quick Strike. So they have their proprietary Quick Skew, which I still maintain is the best in the game. It just pretty much gives you a number for the 25 delta put in terms of how bid or how offered it is to the at the money. And they do the same thing for the 25 delta call. And they will also show you how it has evolved over the course of the past week. You just type it in for yourselves, listeners, cmegroup.com/TWIFO. Those are the initials for our show, This Week in Futures Options. If you type that in, you'll get an awesome drop down right there on the CME website. It's all free. And you can look exactly how the skew is shaping up right now in your favorite indexes. I'm assuming everybody likes to play in the E-mini, so we'll go hang out there. I pulled it up right before showtime so I could see exactly what you folks are going to be seeing. And right now you can look at, obviously, it tells you not just the skew, it tells you a whole bunch of stuff. The at-the-money vol, where all the volume is going up right now today. 20% of the volume so far for this week is going up in the contract that expires in about an hour. So, yeah, as usual, 0 days leading the pack out there. And you can see what they are, the 4,800 puts, which, again, a lot of garbage put selling still in the E-mini to this day out here. But you can also see things like the skew. Like right now, with those, kind of hard to look at skew with a contract going away in a few hours, but the puts right now were about 5% bid to the at the money and 1.5% cheap were the calls. If you go a little bit farther out, let's go out, let's say a few weeks. Let's go out, 2 weeks, 14 days. Those puts, obviously a little bit more bid, 14.5% bid versus 11.2% discount to the calls. Now, if we look at those puts right now, they're actually, that was where it was a week ago. Now, if you look at it right now, they're actually a little bit juicier, a little bit more bid. Those puts are 16.1% bid. The calls, 11.7% discount. That's against an at-the-money vol going out 14 days in the S&P of about 16.3. So that's going to give you real-world metrics and numbers you can sink your teeth into out there. And again, it's all free. We just want to arm you guys and gals with great information out there. If you do decide down the road you want to upgrade to the higher level, the pro level for Bantix, you can go and get charts of the skew and click into them all and see exactly how it's evolved over time. They don't make that available on the free version for obvious reasons. There's a cost associated with them for that. I get it. But you can look at the raw numbers out there, and that's a much better metric, I find, Dan. So Quick Skew, and it's in the name. It's very easy. It's intuitive. You can look at the screenshot and see exactly how it evolves over the entirety of the term structure of the S&P. Obviously, the farther out you go, the more bid those puts are. If you go out about 30 days right now, listeners, those puts are nearly 22% bid to the at-the-money. It's a 22% premium to the at-the-money vol, which going out 30 days is about a 15.3 in the S&P right now. So that gives you real numbers. A week ago, it was 20.5% bid. So vol ticking up, a little bit juicier out there are those puts right now. No longer the screaming deal that they were, let's say, a week before the August 5th sell-off. And we said, hey, puts are a fire sale right now. If you want some protection to put in your back pocket, now is the time. So go look at the real data. That, to me, is my favorite stomping ground for when I need to look at the skew. Let's go to the Quick Skew. It's all there. It's all free. I know a little birdie told me. I just talked to Nick yesterday, actually. They're working on taking this and applying it to your favorite big equity options as well. So your NVIDIAs, your Teslas, all that stuff. Right now, it's limited to the futures options, but it's coming soon for a product you like to trade as well, maybe. So something to keep in mind. But Dan, I love real data at the end of the day, and this to me is real data. But for your analysis, for your purposes, Dan, when you're looking at skew levels, how do you go about it?
It's hard for retail traders. I have not. I was not aware of a useful tool. I need to check out your what you were talking about, the quick skew. So I just kind of look at it, and it ends up being a little less objective than I'd like it to be, because your brain does, if you read anything about behavioral economics, your brain does not remember things as they actually occur. You have recency bias, you have accessibility bias. But, I just try and look and say, oh, well, the puts have a much higher implied volatility than what I perceive to be usual. So that's kind of tough. It's not accurate. So, yeah, I like what you got there, and I want to check it out myself.
There you go. Breaking news here on the show of platforms here, Dan. Yeah, it's good stuff. I heartily recommend it. And again, just talking to him yesterday, he and the team are hard at work at taking that methodology and just applying it to other products you folks like to trade, like your Apples and your Teslas and your Nvidias. So stay tuned for that. That's still in beta. But maybe I'll see if I can get Dan an early glimpse at that fun out there. But yeah, for me, listeners, hard data at the end of the day. Forget these obtuse Franken products like, the SIBO skew index, all this nonsense. Go for the real data at the end of the day. And right now, this puts looking a little bit juicy. Now, you have to bear in mind what the baseline is. Vol is about 15. That's obviously a little bit higher than it was not too long ago, but also off the highs we saw recently into, the 20s, mid to low 20s recently as well. So vol level, at the money vol level is going to be a decider of how expensive the puts are, as well as the skew level. So combine those two. You could have a hefty bid to the puts, but a low overall at the money vol level. So as a result, your net outlay is still going to be lower. So just something to bear in mind. Context is key when you're looking at the skew, at the money vol level, and the level of premium or discount. That's what's going to determine how much you pay. All right, let's keep rolling out there. Again, that URL, cmegroup.com/TWIFO, TWIFO, completely free. Check it out. It's a very useful tool, if I do say so myself. All right, let's keep rolling. Let's go to Boris. Boris P. Got questioners from all over. I love it. Boris P. wants to know, can the hosts talk about their use cases, if they have one, for short straddles versus long straddle? We were just talking about this. Boris, I recommend you go check out, I think, the last episode or the last couple episodes. Dan went on his epic rant about how much he loves long straddles recently on the show. So check that one out. And short straddles, I think I mentioned just last week on the show that my use case for short straddles, I do like them on occasion, but I only like them in a risk mitigated fashion. You're never going to see me go out there and just blast away short at the money straddle and underlying X. That's just insanity to me. I will do that in a risk mitigated fashion, probably with an iron butterfly. So I will sell the at the money straddle, and then I will buy an out of the money strangle against it. So in case, hey, maybe I don't hit an exact bullseye, I don't know exactly where the underlying is going to settle at expiration. So you want to have that little bit of protection in your back pocket in case the worst does come to pass. And so that's why I would do it in an iron butterfly. Some folks like the iron condor better. I prefer the iron fly because you're selling the at the money straddle. If you want a little bit more cushion, you're a little bit more nervous about it, the iron condor, certainly appropriate. One closer to the money strangle you're selling, and then buying a farther out of the money strangle against it to protect it. To each their own, but that's my primary use case. Long straddles are a very different game. I'll let Dan talk about those because he was just raving about them. Dan, your use cases for long and short straddles, sir.
Yeah, I mean, I'm with you on short straddles. I typically don't trade them unless it's a very unique situation. I definitely prefer either the iron condors, iron butterflies, time spreads, which I think we talked about in a recent episode, are basically a synthetic. I mean, in my brain, it's basically a synthetic straddle with protection. And yeah, I mean, straddles were massively underpriced, and they worked out pretty good. Yesterday, I actually took off all the straddles that I had on. That worked out pretty nicely. Being out of town, I am very unlikely to put on anything right now, but I don't know. I don't know if they're still underpriced or not because I'm not thinking about it.
He's not even thinking about it, listen. But yeah, just check out the last couple episodes, Boris. We went into more detail about the use cases for long straddle. Long straddles, you got to have, spoiler alert, short answer, got to have a banger market or an extremely underpriced vol scenario in a particular underlying that you want to scoop. And Dan broke down some examples of that very recently on the show. Short straddles, both Dan and I are going to go iron fly or something along those lines. Risk mitigated. You never want to just let the dice fly like you're doing on the craps table at 2 a.m. in Atlantic City. But I digress. Let's keep rolling. Let's go out to, man, all over the place today with the handles Ndupo. Maybe just Ndupo. Either way, they want to know. I'd like to know if the program can talk about Strangles in great capacity. Wow, okay. Both as a hedge and against existing equity positions. Thank you very much for your time and for this fine learning. So I'm guessing learning program, I'm guessing Ndupo, probably working with a second language there, but hey, well done. You got your question across in a very understandable way. So well done for you there, Ndupo. Strangles. We just talked about Strangles again on the shows. This is another one I feel like we did just touch. And you know what? Dan, we did. Looking at the old Wayback Machine, we just touched on the big episode 300. Dan and I talked about the dangerous world of covered strangles. And I think that's an important one in Ndupo and everybody else because it doesn't get a lot of play. People talk about buying strangles as kind of an alternative to buying straddles. I just talked about them right now with the iron fly versus iron condor. That's the most common use case, I think, for a lot of people, but selling them against an existing equity position also a very viable alternative. It gives you the covered call to the upside and to the downside as long as you're okay adding to your existing position. It could be an interesting way to juice up some of that income. So we talked about that, episode 300, the dangerous world of covered strangles. If you wanted even more, go back to episode 224 from February 15th of last year, where we said, let's get crazy with covered strangles and straddles. So there's 2 episodes for you. If you go all the way back to episode 153, in the heady days of September 2021, listeners, we talked about straddles versus strangles and secret Metallica. That was a fun one. March of that same year, we talked about risk reversals versus strangles in episode 125. And then going back to December of 2019, we talked about hunting for income in a low rate environment, episode 77. Pre-pandemic. We were all so young and innocent, December of 2019, listeners. Little did we know what we had in store for us just a few short months later. But we also talked about using strangles, short strangles in particular in that episode, to juice up your income in a low rate environment. So there you go, Ndupo. There's a bunch of different use cases for an episodes dealing with strangles. Mr. Dan, anything you want to add for our buddy here Ndupo? He wants to talk about strangles in great capacity, both as a hedge and against existing equity positions.
Yeah, we should maybe we should take his advice, do a whole show on it because I think we could. As far as a hedge, I got to wrap my head around what you're trying to hedge exactly and what you mean by that. So feel free to hit us up again with a follow-up to what you mean by hedge. Against an existing equity position, yeah, I mean, I'm actually a big fan of the covered strangle under the right circumstances. I don't do it very often, but under the right circumstances, it's the exact perfect trade for sure.
The perfect trade, says Mr. Dan. Oh, well, we did talk about covered strangles. Maybe it's time to revisit, like I said, the other side of it, perhaps. The long strangle, our most recent forays into strangling, both in this year and last year, were both the covered strangle side. So we haven't really talked about the long strangle since September of 2021. So 3 long years, Dan, since we've talked about long strangles. Maybe we're overdue. What do you think, Dan?
Yeah, man, let's do it.
All right, then I will add it to the list of things Ndupo and others want us to talk about here on the show. So there you go, Ndupo. You ask and you shall receive. Stay tuned to the feed for an upcoming episode all about strangles are use cases. Yeah, you mentioned as a hedge. I don't think of Strangles as a hedge very often. I suppose they can be seen in that light. That's something we'll explore, I think, on that episode. So we'll go into the basics. And then Dan and myself are preferred use cases for long Strangles. Maybe we'll go wild too. Maybe we'll talk about, some cross-product Strangles. Little VIX versus S&P or something like that too, where you're doing kind of a one versus the other, but it's kind of a strangle, but two different products. So we can go wild and crazy with it out there in Dupo. So I'm kind of looking forward to that. So stay tuned for that. Then Dupo and everyone else coming to the feed near you. And of course, coming to this feed post haste in about 20 minutes. We'll be diving into the world of futures. So if you always wanted to know all things about futures, what the hell are they? What's trading out there? We're going to get into all that fun in a little bit with our good pal, Miss Carly Garner. She will be our inaugural guest on that show, so that should be a fun one. In the meantime, Mr. Dan, if folks want to kick the tires and ask you some questions, where should they go? What should they do?
Yeah, make your way on over to markettaker.com, 2 T's in a row, and hit us up anytime. We love speaking to Options Insider Network family, familia. So hit us up anytime. Glad to help.
There you go. Hit them up, markettaker.com. And while you're hitting things up, public.com/optionsbootcamp. I tell you all the time to go check out Public. Now they have a specific URL for you to do just that, public.com/optionsbootcamp. So if you go check them out, we'd appreciate it if you use that URL, listeners, because that shows them, hey, you're coming to them from our show. In fact, they just inquired about renewing again. So clearly, they are liking what you folks are bringing to the table over there in Public land. Keep supporting the show, public.com/optionsbootcamp. While you're there, kick the tires on the rebate. It's always nice to get paid to trade at the end of the day. We all want to trade here. That's why you're listening to this show. So it's nice to reduce that overall cost. And then, of course, kick the tires on the platform. Tell them what you like. Maybe tell them what you'd like to see them add in the future. All that feedback is valuable. Public.com/optionsbootcamp, the place to go to learn more. We got to get on out of here. But like I said, back again in about 20 minutes to talk all things futures on the inaugural episode of the Futures Rundown. Can you tell I'm a little bit excited, listeners? So we'll see you then.
If you trade options, you've got to ask yourself, why would you choose an options trading platform that puts investors first? At public.com, there are no commissions or per contract fees. And more importantly, it's the only platform where you can earn a rebate on every single contract traded. That means you can save on your options trading costs and keep more of your capital in play. Whenever you trade options on Public, your savings are automatically applied. So, don't change your strategy, change your platform, and see the difference in your bottom line. No commissions, no per contract fees. And it's the only options trading platform where you can earn a rebate on every contract traded. To learn more, please visit public.com/optionsbootcamp. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.